Welcome to Morning Brief, presented by Robinhood, the home to commission-free trading. I'm Julie Hyman. Let's get to the three things you need to know today. First up, the waiting game for official economic data is almost over. Tomorrow, investors will get the November jobs report along with some labor market data for October. Later this week, we'll also receive a key inflation report with the consumer price index. The data deluge will help provide insight into the Fed's fight against inflation and the health of the U.S. labor market. The central bank now sees one rate cut next year, even after two officials dissented to keep rates on pause. But bad news could be good news for investors. Maybe we're back to that. Morgan Stanley's Mike Wilson says any labor market weakness could keep rate cuts on the table. And he says that's a net positive for stocks. Others on Wall Street are bullish as well. Citigroup, for example, sees earnings growth delivering a 13% rally for the S&P 500 next year. Stocks are currently trading near record highs, and the benchmark index is looking to close out a third consecutive year of double-digit gains. And helping drive the gains, of course, artificial intelligence, which takes me to Yahoo Finance's 11th annual Company of the Year. This year, we have given the award to, drumroll please, OpenAI. The maker of ChatGPT has been at the center of the AI trade on Wall Street. The company struck mega deals with Microsoft, Oracle, AMD, NVIDIA, and more. Meanwhile, AI competition's heating up as everyone looks to capitalize on the AI gold rush. We will have full coverage all day on the Company of the Year and bring you our exclusive interview with OpenAI CFO, Sarah Friar. Let's get a check-in on stock futures. We only have a few weeks left of the year, of course, the trading year and the actual calendar year. And we are seeing futures this morning point to a higher open. So pushing back towards some of these record highs we've been watching here. The Dow futures pointing to a gain of about 0.5% at the open. S&P futures about the same. NASDAQ 100 futures pointed to a gain of about 0.7%. Yahoo Finance has officially announced the Company of the Year. And this year, it's been a company at the center of Wall Street's bet on artificial intelligence, OpenAI. Here's what OpenAI CFO Sarah Friar had to say about the award.
We're energized to get an award like this. It really cements, I think, what ChatGPT has become, which is the world's default intelligence layer.
Joining us for more, Yahoo Finance executive editor Brian Sozzi, who helms this whole process for
us.
I
love doing this award, Julie. This is cool stuff.
I know you do.
I do. I really do.
You're a big winners and losers tallying guy.
But look, and also in the running, Julie, was NVIDIA. Now, I'm not going to sit here and say that NVIDIA didn't have a great year. Yeah. Not a transformational company, but at the end of the day, OpenAI has been at the center, I would think, of the market narrative. When it announced a big deal with AMD a couple months ago, AMD's stock shut up. Then you have OpenAI also potentially becoming an investor in AMD. They're putting orders in for NVIDIA chips. So this company, at least to me, and our editorial team, at the center of the AI trade.
Yeah, and this is the first time, if I'm not mistaken, that we have chosen a private company.
That is correct. This is the first time. I should mention, I was just talking about NVIDIA. They actually won in 2016 before they were really NVIDIA. At the time, they were just a gaming chips company. But again, OpenAI, first private company we've awarded to, with good reason. The valuations have gone up. I encourage everyone to go onto the Yahoo Finance Instagram account. Really some awesome charts out there right now showing how much the valuation has in fact risen for OpenAI. A bunch of great feature pieces now on our homepage looking at what's next for OpenAI, which could include hardware, Julie. Hardware, yes. I don't know if it's going to be an iPhone killer. Sarah, I asked her about when this hardware could potentially come. Of course, they acquired Johnny Ives' company. Of course, Johnny worked with Apple CEO and founder Steve Jobs to create the iPhone. I don't think this device is coming in the first quarter of next year, but they're clearly working on it despite them being in a code red moment.
I don't know, that Pebble thing that you wear around your neck, what is it called? The Friend? That AI hardware device?
That's a great name. That's a great name.
I think that's what it's called. That one didn't, I feel like landed with a clunk.
There was a lot of speculation that Johnny likes pens. So I was trying to imagine while I was doing this piece, like if I have this on my desk, does that somehow talk to me? No idea. But I think the company has not. There's been a lot of focus of the past few weeks of them being in this code red moment, really drilling down on ChatGPT and its functionality, who take the fight back to Gemini 3. You'll see more updates very soon, Sarah was telling me, on ChatGPT. But I don't think they have stopped working on hardware to reinvest in ChatGPT.
I mean, yeah, and the latest, they have now come out with an updated ChatGPT in response to that code red. But what you're talking about being at the center of the AI trade, That's for good and for ill, right? Let's not forget
Oh, God, yes.
that there's a lot of questions about its centrality as the fulcrum for this whole thing, and that means that there is vulnerability in the system because their plans are extraordinarily ambitious. They're spending plans, and there's been a lot of questions about that huge spending at the same time that they are burning and burning and burning cash, and the revenue ramp is, there are questions about whether it's going to ramp fast enough to meet that spending.
You're right on. And this is the term that we've been talking about for weeks, circular financing.
Yeah.
And that's why I think Sarah Fry is the perfect CFO to be running OpenAI at this juncture. Of course, she worked with Jack Dorsey at Square. She was the CFO. She was the CEO of Nextdoor, where I think you and I originally met Sarah. She knows how to raise money. She knows the people to connect with to raise more money. I would suspect they're going to raise more money next year because they have to fuel their ambitions. But to your point, at some point, they're going to have to, I think, give a clear line of sight on when profitability will be hit.
Right. And of course, an IPO is somewhere in the
We asked Sarah about IPO. Kind of a similar answer that I got from Sarah when I talked to her at the Goldman conference in September. She wasn't going to come on today, of course, and announce that they're going public.
Right.
That's not how it goes. Could it happen next year? I'm not ruling it out.
Yeah, interesting. Okay, we look forward to talking
Thanks, Julie.
much
Appreciate
more
it.
about this. And as part of our Company of the Year coverage, you're going to have a special guest on your show today.
Special guests, I know. I know. Well, you didn't think I know that? I just wrote the show script. Of course I know that, Julie. I'm so excited. You're going to be at the top of the show. You're doing triple duty today.
Yes, looking forward to
All hands on deck.
Okay, thanks, Us. A big week of economic data on tap with the delayed jobs report and CPI report due out. Joining me now, Federal Reserve correspondent Jennifer Schonberger to talk more about all of this. Let's take the jobs report first because that one is coming out tomorrow, Jen. So what are the expectations looking like here?
Hey there, Julia. Fed officials finally going to be getting that key, more current official government data that they have been waiting for. As you mentioned, the November jobs report due out tomorrow. Economists expecting 50,000 on the payroll number. Now, the last jobs report we got was the September jobs report, which was released with a 2-month delay. That had shown 119,000 on payrolls. The unemployment rate expected to tick up to 4.5% from 4.4%. Now, Fed Chair Jay Powell has already warned that Fed officials are going to take a skeptical eye to this data because of the government shutdown that may have skewed this. At the same time, we saw more than 150,000 government workers roll off of payrolls on October 1st. So that is likely being factored in as well. So maybe not getting a more accurate snapshot of the job market until the next report due out in January. And Chair Powell had said that they think that monthly payroll data has been overstated by 60,000 per month, and that really we have seen negative job growth perhaps of 20,000 per month. Now, we're also going to be getting some key inflation data this week with the Consumer Price Index. That is due out Thursday morning, and economists expect that on a core basis, which strips out those volatile food and energy prices, we're likely to see inflation stuck at about 3%, Julie.
And Jen, okay, so we're getting all of this data. Of course, everybody wants to know what it means for what the Fed is doing. In the meantime, the horse race for who will be the next Fed chair is continuing, and it seems like it's narrowed down, at least for now, to the battle of the Kevins once again.
Yes, once again, it is between the two Kevins. You know, I feel like we could have it could be earlier this year, right? Like not much has changed. So yes, we've got former Fed Governor Kevin Warsh, who the president said during an interview on Friday with the Wall Street Journal is looking to be like his top choice. But he also still favors Kevin Hassett, his current director of National Economic Council of Advisors. Certainly investors are handicapping that Hassett is likely to be the choice. But recall that the president did sit down with Warsh last Wednesday, just as the Fed was actually making their interest rate decision. And Warsh affirmed to the president what he really wanted to hear, which is that he favors lower interest rates. And the president is looking for somebody who's going to carry that out. So perhaps that one of the major reasons why Warsh is at the top of the president's list. And we know that Warsh has been highly critical of this central central bank. He penned an op-ed in the Wall Street Journal recently saying that they need to throw this stagnation scenario out of the window because AI is going to really increase productivity, putting downward pressure on inflation, and therefore the Fed can continue to lower rates. Julie.
Jen, thanks so much. Appreciate it. Let's talk more about the stock backdrop here because we are seeing them rise ahead of the big week of economic data. Our markets and data editor, Jared Blickery, is here now with a look at the latest moves and that sort of backdrop in the market. Jared?
Yes, Julie, it is very unusual to get this caliber of economic reports in the middle of December. Usually we would expect very quiet trading this week, but let's take a look at what happened overnight. You can see we saw some weakness in Asia, but in Europe things have turned around. They still have a couple more hours to go in their afternoon session. Here in the U.S., on the back of that, we are up and we are being led by the Russell 2000. That is up 0.9%. NASDAQ up 7, S&P 6, and the Dow up about 0.5%. And I thought it'd be interesting just to track what's happened so far real quickly in the month of December. Dow is positive, but tech has not done as well. NASDAQ is in the red there for about less than 1 percentage point, so not a huge loss. S&P 500 even less than that. And also the S&P 500 equal weight index, which tends to track the Dow. I've been watching this anecdotally all year. They both tend to surge at the same time. So this is a story about the rally broadening right now. And we've seen a lot of other sectors kind of step up when we have the tech sector flagging as we do right now. And just quickly checking in on the bond market, here's a look at the 10-year T-note yield. It is down 3 basis points today. Over the last 10 days, it is somewhat elevated, but not to critical levels. 30-year, very similar situation, down a little bit today, up for the month of December. And I will quickly check on the sector action. This is what happened Friday. Tech was leading to the downside, down almost 3%, while Staples was in the pole position there. And then here's what's happening this morning. A very cyclical driven rally. We see consumer discretionary perking up. That's up almost 1% in the pre-market. Then materials, then industrials, then tech, then financials, communication services. That's the top row. So we're seeing a pretty good, healthy swath of the market into the early goings, a little bit positive right now.
Jared, of course, it's the end of the year, so we tend to sort of just start to do a lot of reflecting on the last year and what may lie ahead. And one of the stocks that we're focusing in on, of course, is Tesla. By the way, Dan Ives of Wedbush is out with a note on the stock this morning, reiterating his outperform and putting a 12-month price target of $600 here, and just talking about that it's going to be that's a maintenance of the $600 price target. But he talks about that next year is when the AI thesis is really going to kick in, and he says that's when we're going to see a $2 trillion valuation in the next year for this company. So that's his sort of fundamental case. I know you're looking at some of the technicals for the stock as well.
Yes, and very complimentary there. Here's a look at the year-to-date in Tesla behind me, but I'm going to show you a 2-year because the year-to-date gives you an incomplete pattern. We have what started very late last year, a cup and then a handle right here. This is a very powerful pattern. When it breaks to the upside, it doesn't have to, but if it breaks to the upside, I would expect a sizable rally from here, just given the length of the basing, which has been 1 year. As the saying goes in technical analysis, the longer the base, the higher in space. And so Tesla could very well break out. The critical level on a closing basis is 480. I was going over a potential options trade, selling a covered call. If you don't think it's going to break out until January, mid-January so, you might be able to get some money in your account if you hold Tesla shares. But even if you let it stay here, if we are able to break out, I could easily see 600 in Q1 of next year in Tesla.
All right. Well, then same page with Mr. Ives there.
How about that?
And then finally, we later in the show are going to be looking at the worst performers of the Dow this year. But right now, let's start off with a more positive note. What are some of the best performers in the Dow this year?
Yes, let's take a look at that. I have the year-to-date in the Dow behind me. I'm going to sort by performance. In the upper left, guess what? It is Caterpillar, also the leader this quarter since October. That's a 2-year. Let's just do a year-to-date, and we can see after that post-Liberation Day sell-off, it has just been a very steady climb up and to the right here, and that's really what you want to see in a chart. Very low volatility, just going up day after day. Caterpillar is an AI story. All those power generators that are critical for AI infrastructure, and then just regular infrastructure as well. It has just been performing very well on those fronts this year. In second place, we have Goldman Sachs. And let's not forget that the interest rate environment has been very friendly as the Fed is lowering rates without the prospect of recession. That really juices the banks, and that's what we're seeing in Goldman Sachs. It is up 55%. From the bottom, it is actually up 92%, so it is nearly doubled. And then we have J&J. I don't talk about J&J a lot, but this is a stock that never even went negative after the Liberation Day, when most of the stocks were down 20, 30, 40, 50%. This was stayed in the green, and that's what staples are supposed to do, just be kind of those steady netty trades, although don't usually see 46% gains from staples year after year. Then IBM, there's another story of just stair-stepping higher. I'll show you a 10-year chart. It recently, or actually a 25-year, this is a very long-term pattern here. It broke to the upside in the early 2020s, and it is just not looking back since. Julie.
Interesting stuff there. Okay, so that's the pluses. Stay tuned later in the show. Jared and I are going to cover the stocks that underperformed within the Dow. You get a little teaser there looking at that screen. Thanks, Jared. Coming up on Morning Brief, we'll bring you today's top trending tickers and count you down to the opening bell. Welcome back to Morning Brief, presented by Robinhood. Now time for some of today's trending tickers. We are watching iRobot, ServiceNow, and Texas Instruments. First up, iRobot. The company behind Roomba has filed for bankruptcy and plans to go private. iRobot will be taken over by its main Chinese supplier. Remember, it enjoyed initial success with the Roomba that it debuted in 2002, but earnings at the firm started to decline in the post-COVID era, hit by supply chain issues and cheaper competitors. The common stock of the company will be wiped out under the proposed Chapter 11 plan. Next, ServiceNow, reportedly in talks to acquire startup Armis for $7 billion. It would be the company's largest acquisition to date. Armis is a cybersecurity firm specializing in identifying and tracking security threats on devices. Meanwhile, ServiceNow also getting a downgrade at KeyBank. The analysts cut the stock to underweight and set its price target as $775. The analyst also downgrading Adobe as he sees AI tools bringing a bigger hit to both firms. ServiceNow, though, does still have 44 buy ratings across Wall Street. And finally, Texas Instruments. Goldman Sachs downgraded the stock by 2 notches, a so-called double downgrade, to sell from buy. The analyst does see a recovery for the analog chip market overall, but cites issues specific to Texas Instruments. Among them, its strategic capacity and capital choices that will weigh on margins and earnings relative to peers. Continuing our look at OpenAI, Yahoo Finance's 2025 Company of the Year, the startup was part of nearly every conversation about the AI trade in 2025. It hasn't even gone public yet. Joining us for what next year might look like for OpenAI and the publicly traded ecosystem around it and AI more broadly is John Belton, Gabelli Funds portfolio manager. John, thanks for being here. So we named OpenAI the Company of the Year. Not surprisingly, it's at the center of many of these AI discussions, as I just mentioned. So is that going to sort of play out in a more positive or negative fashion next year, considering that there have been some questions raised about the reliance of this trade on this company?
Right. Yeah. No, thanks for having me, Julie. I mean, OpenAI is clearly one of the most, if not the most, company in the artificial intelligence space right now. What's become clear this year are a couple things. First, the revenue trajectory for this company is staggering. It's unprecedented. I think going from low single-digit $1 billion to exiting the year, approaching $20 billion of annualized revenue run rate, I think is the latest disclosures, with a user base that's now approaching 900 million weekly active users. So a lot of really exciting growth. I think what the market has become a little bit skittish around is the magnitude of investment plans that this company has laid out. They're speaking to $1 trillion plus infrastructure build out over the next several years. So just a really ambitious company with really strong growth that is really important to the entire ecosystem.
When you are investing around the AI thesis at this point, John, how are you thinking about doing it at this stage of the game? I mean, as you know, there's also a lot of discussion when people are drawing parallels to, say, the dot-com bubble or other technological innovation waves that we've seen in the past. frequently the winner that you see in the beginning isn't necessarily the winner that comes out in the end, even if the technology itself is viable and important, et cetera. So how do you think about that sort of question?
Well, yeah, I still think it's very early in the evolution of this technology. I think there's been a couple use cases that really have proven out for artificial intelligence to date. I think those would be using AI in digital media, digital advertising, using it in e-commerce businesses, in cloud computing, and then in these LLM chatbots, which is kind of a brand new area that's already pretty massive industry. I think those are the use cases that are already pretty proven out. I think there's another collection of use cases that are exciting, kind of starting to commercialize, things like autonomous driving, robotics, agentic software, another one there. And then there's another group of sort of, use cases we can think about for the future that are still much earlier in their development. So use of AI in life sciences, in medical diagnostics, in drug discovery, things like that. So I think we're still pretty early in how this technology is gonna play out in all that it's going to be able to do. And so I think from that perspective, I think the companies that are involved in the infrastructure build out are still decent places to be. We are going to need to see some of those future use cases start to commercialize to underwrite, strong and consistent earnings growth, but very, very encouraged by what we've seen so far, definitely.
And as you know, there's been a lot of competition between the largest of the LLMs. OpenAI is not alone, right? You have Gemini that's sort of been coming up. You have Anthropic more on the enterprise side. As an investor, do you feel like you have to choose a side, so to speak, or do you just kind of, again, invest across all of it?
Yeah, I think in terms of the foundation model businesses, it does seem like 4 or 5 companies, at least in the US, are starting to separate themselves from the pack. You just alluded to OpenAI and Gemini, I think XAI and Anthropic as well, and maybe Meta, depending on what they're coming out with in the early part of 2026. But I think there's a lot of short-term attention in the market that's being placed on the newest model releases and the kind of the standings, the rankings on model capabilities. And I just think it's going to be fluid for a while. I think certain models are going to end up specializing in certain areas and being the best in certain areas, and other models will be better in other areas. So I don't think picking one foundation model company today is a great way to go about it. But it does feel like the few companies at the top are starting to really separate themselves from the pack. And given this is such a capital intensive business, it's probably going to be harder and harder for everyone else to keep pace with those companies.
John, thanks so much. Appreciate it.
Yeah, thanks for having me.
Coming up on Yahoo Finance Opening Bid, our executive editor, Brian Sozzi, is back with us right now. Let me guess, we're going to be talking much more about Company of the Year.
We're going to continue that Company of the Year coverage, Julie, diving into what OpenAI has done this year, what it may do next year, and frankly, what it may do for the next decade. And I have a very special guest at the top, Julie. I know you're excited about it.
I am excited about it. I'm going to be with you at the top of the hour.
That's a special guest.
Along with some other people. We'll be talking much more about this. And
not that they're not special, Julie. You're just extra special.
I appreciate it. Well, because I'm rare. I don't often join your show, so I'm looking forward to it.
No problem.
All right, that does it for Morning Brief, presented by Robinhood. Much more ahead. Opening Bid is next.